Hi, I'm Jason Jessup and I'm the CEO of Magna Mining. Magna is a producing copper company with mines in Sudbury, Ontario, and some very exciting exploration opportunities.
Jason, good to see you, sir.
Great to see you.
You better come over here. We're in danger of looking like a boy band remake there. Right, so here we are, Beaver Creek. You're going to be chatting to people, but it's not going to be about raising money, is it?
No, we luckily raised money last week, so we're coming here now to tell a great story and to meet some new investors. But yeah, when this financing closes, we'll be all cashed up.
That's nice. And I guess everyone's going to be talking about, and we will talk today about what that means, obviously. But what type of money came in? What did we look at?
We set out to raise through a life offering, $45 million that could be upsized to $50 million. What I can tell you is we had very, very good demand. The book closed quite quickly. So that's really exciting. And it was done at I think a very good price for us and our existing shareholders. And I also think it's a great point for others to get in with some great news we've had out over the last couple of weeks.
I'm interested in the type of money that came in, because we're seeing all sorts of changes in the marketplace. You got the money you wanted, you got it quick. Was it from the usual suspects?
You know, we had about 22 institutions participate, and then some high net worth people and some other existing investors. A decent little amount of retail, but really it was very much institutional and very diverse from all over the world.
Right.
So that was great. A few generalist funds that, to be quite honest with you, I wasn't familiar with at all, and quite surprised, but they put in some chunky orders. So yeah, it was a great mix of new investors, existing investors, and international.
It's interesting when the generalists come in, because they've got a different weight of money. Do you know what I mean?
Absolutely.
They know a little bit less, but they can throw a lot more at it in that sense. So they have their own expectations. They may not be used to the sort of narrative that you're used to telling. I think.
I think they're looking, for thematics, and copper's a big one right now. Obviously gold, and luckily we have both in our hole we announced about a week and a half ago.
Yeah.
So yeah, I think there's people, generalists, that want to diversify, have exposure to these metals. And they have a lot of cash on hand. So I think it's a very interesting time in our industry, especially for those commodities.
Right, you said something a second ago, which I want to kind of pick you up on, right? Okay, it's not too late. Having looked at your share price go on a rip and on a bit of a tear, if it's not too late, I'm going to need to see a few things from the company, right? You've gone into some old former producing high-grade mines. You're finding more, it's great. You're going to need to demonstrate scale to me. And then I think the next thing, and I'd love to hear how you're going to go about it, maybe we can focus on Levack specifically, how do you make money? Because rather than plow it back and down, how are you going to make money? So let's start with the 45 million bucks. What are you going to use that for? And then maybe answer those couple of questions for me.
So, again, just for those who aren't as familiar with the story, we acquired these assets. So we had a portfolio of projects prior to this, but we acquired McCreedy West, which is a producing copper mine, and the Levack mine right next door to it, as well as 6 other properties in Sudbury from KGHM International. Now, these properties were the former FNX properties, and I was part of FNX Mining. I managed the operations at Levack Mine as well as McCreedy West Mine during my time there. So we know these assets really well. Dave King was part of the exploration team with FNX and made a number of discoveries. So when we took these over, we had high expectations of what they still could do in the hands of a nimble junior that has a lot of history and familiarity with these mines. So I looked at the mines, and there was a deposit at Levack Mine specifically originally it was called the Levack Footwall Deposit, the LFD, renamed the Morrison Deposit after Gord Morrison. And this was really the flagship discovery for FNX. It was announced in 2005. We went on to bring that into commercial production. I led the team there in 2009 as we developed that, announced commercial production in 2010. And this deposit mined about a little over 2 million tons at very high grades. While I was there with FNX, ramping things up, we were consistently mining 10% copper, about 10 grams of precious metals, quarter after quarter, and making very large margins on this. Now, KGHM put this deposit in this mine on care and maintenance in 2019. There's still a historic resource left there and lots of, I'd say, depth potential. But what our team really set out to do was, okay, so FNX discovered this footwall deposit, and Levack's a fairly large property. The footwall of the contact nickel, which Inco mined, is largely underexplored. FNX focused on drilling out this Morrison deposit, and you talk about, it's not too late. FNX was about a $350 a share stock, and when they announced this, one of the analysts covering it, who knew Sudbury, who knew footwall deposits, doubled his target price to $7. And at that point, people were skeptical, and as it was drilled out and people started understanding the value of this deposit, the share price kept climbing, and by 2007 hit a peak of about $39 a share. Wow. And it really was our flagship. And even after the financial crisis, when metal prices went down, we continued to move forward with it, brought it into production at that time, and metal prices rebounded somewhat, made a lot of money. When I was there, we made a lot of money. So I said, we need to find another one of these. And that's what we set out to do. So our team worked very diligently, understanding, okay, what are the controls that control where this deposit is? And then where do we see that again on the property? And they came up with a theory. We tested that theory and drilled below the number 3 ore body, which is an area that was not really tested, very underexplored, at a depth of about 2,700 feet and basically open below that, so relatively shallow. So we drilled the hole. In July, we announced our 14A hole, and that hole intersected a 2-foot intersection of massive nickel with 8% nickel, about 2.5 copper, and about 18 grams precious metals, which when I looked at that core, I said, this looks like the top of the LFD, the top of the Morrison deposit. Okay. When we first developed into that, it was massive narrow vein nickel. So then we said, okay, well, I think we're onto something. Our theory has got some evidence. Then we went and deepened another hole, about 500 meters, and did geophysics. It told us there's a conductor to the north, and this would have been about 200 meters below. So we wedged off of that hole and intersected this conductor, this conductive geophysical plate, and that's where we intersected the hole that we announced just about a week ago. Yeah. And that, I believe, is, well, it's a massive copper, 2 veins in a breccia zone that look a lot like the Morrison deposit, about 400 or 500 feet below. So
give us the grades again, remind me.
So the intersection, there was a massive sulfide vein, about 1 meter, that graded 29% copper and 53 grams of platinum, palladium, gold, plus a little bit of nickel. Yeah. But within that 53 grams, it had 29 grams of gold alone, and then the rest was platinum and palladium. Yeah. And then over about 2.6 meters, it was roughly 14% copper, about 29 grams and of platinum, palladium, gold combined with some nickel, over 2.6 meters. And then there was a second vein, similar grades, about half a meter, 75 meters down the hole.
Talk to me about that, because I want the folks at home to kind of understand what it means when you say it is a looky-likey. It looks like what I know historically what we did, okay? 1 meter doesn't sound a lot, and I'd love to understand dilution and all of that kind of stuff, chasing a vein of that size. But what else does it tell you about what's around there in terms of like total contained metal per ton?
Yeah, so anybody can do the math. If you're looking at a short ton, 1% copper is about 20 pounds of copper. So if you have, you can say over 2.6 meters is a mineable width. And a lot of this is mined fairly selectively. Yeah. 14% copper, 20 pounds contained per percent. You can do the math of what that could be worth, plus the precious metals, which is spectacular. So there's a lot there, but really, what the geophysics is telling us is that we're on the edge of this plate, because we did geophysics in that wedge hole. Yeah. We're drilling a second wedge hole that'll test the center of that plate. Right. From our experience with the Morrison deposit, these systems on the edges, they pinch out, they get thin, and they could be 30 centimeters for the last 50 meters on each end. Yeah. And then in the center, they could be 3-4 meters wide.
That's what we're hunting.
That's what we want to get to. Okay. So we always call that's the core, that's the trunk vein. Yeah. So typically when we mine the Morrison deposit, we'd go into the trunk vein, you'd mine that part out fast, make a lot of money, mine really high grade, and then you'd come back for the peripheral on the ends, and you'd mine those more selectively.
Does it go anywhere? Does it end up anywhere, this trunk vein?
Well, it goes at depth. So
goes at depth, okay.
yeah, so
Right,
it may have 200 meters of sort of strike length, where 100 meters or 75 meters is really thick and fat, and then it pinches down from maybe 1 meter to next to nothing at 200 meters strike length, and that's typically what it is. Now, but again, as you go deeper, and at the Morrison deposit, we started mining at the 2,900 foot level. All these old Inco mines are in feet. The 2,900 foot level, around the 4,000 foot level, that's where it became 6 and 7 meter wide trunk veins. Those were beautiful jewelry boxes where you would mine, it would be just massive chalcopyrite on all sides. It was incredible.
So would you say that's what we're ultimately hunting? That's what you're ultimately hunting?
That's what we're ultimately
hunting.
Morrison. And that's what we're looking at right now. Now, the one thing that's a positive difference is in the upper part of the Morrison, we would typically have, and I say in the first 500 vertical feet, where we had nickel-rich veins that transitioned into copper-rich veins that transitioned into big, thick trunk veins. And those upper parts, we typically have between 1 and 5 grams of precious metals, platinum, palladium, gold, mostly palladium. So in that first hole we hit, the 14A, when we hit almost 18 grams of precious metals, that was elevated. I thought maybe it's just a chance. When we hit with the massive chalcopyrite, 53 grams, with almost an ounce of gold, that's different. That is not what we expected. And so that's exciting. So in these next 3 or 4 holes we're going to drill. So we're going to drill a wedge hole 50 meters beside this one, same elevation. We should have those results out beginning of October. What I would expect, what I would hope, is it's going to be thicker than 1 meter, and there's still a second vein that hopefully is thicker than half a meter, which tells us in the center it's thicker. But it's really the down dip. I want to see what it's going to be like 300 or 400 feet below, 150 meters below. So we'll be bringing in another drill that'll be testing 150 meters below down dip of this hopefully thicker area. So if we hit on that one, and that hole we should know by the end of October. If we hit on that one, I think we can call this a discovery.
Well, it's already a discovery, but
we're being conservative.
Major discovery. Okay, tell me more about the Morrison example there, because it kind of feels, when I've been sort of looking at what you're doing, it's great, it's super high grade compared to most copper plays at the moment, but it's one of those things where it's kind of hamster wheel-ish. It's like we're running hard to kind of stand still and whilst we work out what the heck's going on. But if you always had this vision in your head of, I think we've kind of got another Morrison on our hands here, and you've explained how the market reacted last time out, are you in a position now to dramatically change the fortunes of the company? Rather than this, we're producing enough to plow it back in the ground to chase more, and I guess seismically change the economics of this thing if you can replicate the Morrison thing at depth. This trunking, 7-8 meter trunking you've seen in the past. So it's a different profile.
This is the beauty of it. Right. And so whether it's another Morrison, whether it's bigger or smaller, it's good grade. So I don't know what it's going to end up being. Time will tell. I think we'll have a good idea over the next few months if it's got some size and thickness. But the great thing about it is we have development now in the ramp that goes down the Morrison ramp, which is accessible and goes down to about 5,000 feet below surface. So this upper part that we're drilling right now, call it around 2,900 feet, 2,800 feet below surface, we can actually drive down a ramp with rubber-tired vehicles, set up a diamond drill on the 2,900, on the 3,900, on the 4,500 levels, and drill 500 to 600 meter holes to test this horizontally. Now, let's just say hypothetically, we drill into, at the 3,900 foot level, we drill a horizontal hole, 500 meters, and we intersect a trunk vein, a big, thick, massive, juicy one. Then we can just use our development crews and drive a drift across into it. And once we intersect that, all the ramps there, we can do this on multiple levels if we do have a system that has a lot of depth extent. So hypothetically, we could come in on the 2,900 level, we come in the 3,400 level, every 500 vertical feet drive across. Now we can connect up those with raises. We have ventilation, we have multiple mining levels, we already have a ramp, we have a loading pocket, we can start hoisting ore. So where the Morrison really took us a good 24 months to ramp up to commercial production.
Well, and you're paying for it.
And you're paying for it. Like all this is there. And it's like, it's the greatest restart potential that I've ever had an experience
Well, I
working
think
with.
that's phenomenal thing. When I you look at the photographs and videos on your website, you just say, my goodness, you guys have really inherited a ton of infrastructure which you're not needing to pay for, and you take full advantage of.
I can't imagine
the dramatic difference.
Absolutely.
It's the difference between profitable and not.
The difference between making a discovery like this in the James Bay lowlands where there's no infrastructure around and then trying to bring that into production, or making a discovery like this that is within hundreds of meters of an active mine that has a shaft and all the infrastructure there, like it's remarkable. Like the capital to put this into production is going to be, and the time and the money. And so one of the other things, again, in the Morrison deposit, at the top of it, it was very narrow veins. Some of them were, 30 to 60 centimeters you're mining. As you're driving the ramp down, we would sill in and start mining. So production was like very incremental until we got down deep.
Yeah.
Here we can start deep. We can start wherever it's the thickest.
Also like the, I guess the shape of the team as a result. You're not doing the admin, you're chasing money.
Yeah.
That's what I like.
And I love that too.
Yeah.
Like, I can't help because I'm a mining guy. I can't help but start to do the back of the envelope modeling of, how many tons could we mine? How many tons could we mine? What's the diluted grade look like? We have a really good idea what the terms are because we have terms for the Morrison already. So, how much will we get paid selling this to Valley? So it's just, when you bring it to surface, we sample it, we truck it off, we get paid.
Okay, so let's because the process is simple, for sure.
Very simple.
Let's come back to these 3 holes. Have you started any of those, or are these planned? And if so, how have you targeted those?
Yeah, so we have one hole now. It's the wedge one that'll be intersecting 40 to 50 meters to the north on roughly the same elevation of this last hole we put out. So that one, with any luck, is going to be finished in the next 7 to 10 days. I think we will rush those assays because everyone's going to know how much precious metals in it, how big it is. So we'll rush that, and hopefully that will be out early in October. So if that comes out early in October, that's great. But we have a second drill rig that's mobilizing this week that will be able to drill that deeper hole and test down deeper. As well, we have an underground rig mobilizing this week that probably won't start drilling till the following week.
Right.
But within, call it 2 weeks, I would hope to have 3 drills turning. Now, once we're finished this hole that we're drilling to the north of the last one, then that one will also test deeper, but it won't be as much. It'll be another wedge, probably testing 50 to 75 meters deeper. The one from surface that'll be deepening another hole will test probably 150 meters down. Again, we'll be doing geophysics on all these holes. So, my expectation of the team is we will have probably 3 more holes that we'll be able to release results from by the end of October. I might be pushing it a little bit, but that's my expectation. Is like, guys, let's get organized. Let's get these holes drilled. Let's figure out what we have.
Right. So let's get on to that because that's exciting. Will 3 holes be enough to confirm what you think, or will there be a kind of extended program after that?
Oh, it's going to grow.
It's going to grow.
It's going to grow.
And now you've got the money to do all of the above. But when you talk about wanting to make a new discovery, or I guess upweight the discovery that's already there, what does that need to look like for you economically? What does it need to look like in terms of grades? What does it need to look like in time frame, being able to kind of create wrap value around that?
Yeah, that's a great question. And it's very broad. One of the wild cards is how much precious metals are actually in this. Did we hit one area that was higher in precious metals? Maybe we're going to see the areas that are a lot lower. If you look at, I think in some of the articles or the news that came out, that intersection over that 1 meter is like 50% copper equivalent based on how we calculate that. With 29% copper. So the other part is primarily precious metals. So precious metals can have a huge impact on the value of that rock. So we'll see how that goes. Bottom line is, because there's so little development required to actually restart this, I think even if it's very small, which I don't think it is, but even if it is very small, hundreds of thousands of tons, it's the best ore that we can mine. And I'll call it ore, even though it's not yet. But it's so high value, we would go after it.
Right.
But next year, really what we want to do is I want to see 4 drills underground. So we'll get away from the surface drilling this fall. Be all done. We'll have all the platforms. We're already in the process of getting areas ready for drills and then mobilizing drills. We'll get 4 drills turning underground. With 4 drills turning, and subject to success, my goal would be for us to have a lot of news flow coming out, but a resource by the end of next year. And what that looks like, we don't know yet.
Okay, and what are you in a position to do? Because coming back to the first question outside of this interview was like, okay, scale, clearly, the more drilling, you'll show us more metal, more contained metal in the ground. That's fantastic. But how do you, that transfer from turning money over to making money net, building up caches, all that kind of good stuff. That's where where real mines kind of stand out from, all the runners in the race.
Yeah.
So what are the steps you feel that you can need to get over the line before you do that kind of transfer, that move into really making?
Well, again, to put together a mine plan that has really strong economics, first thing you need is a really strong deposit. And so we'll get the drilling done. As we're doing that, we're going to start evaluating options of how would we approach this. Do we want to drive a drift out 300 meters and drill closer holes, tighter spacing? What level of confidence do we feel like we need before we're going to make a decision to actually go in? Do we want to get in next year and start silling into this on 500-foot spacings? What does that look like? What would it cost? So these are the kind of questions we're asking. Again, this is very, very new. We are a few weeks into it. So we're figuring that out, but like this is what gets exciting, is when we look at these metals. So there's copper, there's gold, there's platinum, there's palladium, there's nickel, there's cobalt, there's silver. It's actually a lot of silver. We don't talk about silver because it's a byproduct, but there's a lot of silver. So when we look, these are all payable metals that recover well.
That's why I'm talking about contained metal, because it's the value of the metal, per ton, or how you want to measure it. I'm not saying there's a copper play, or a nickel play, or a gold play, or a palladium play. I'm just saying there's clearly a kind of polymetallic component to this, and the contained metal value is what you're chasing down. So let that be understood, that you're not limited by what's happening in any metal price at the moment, any one metal price at the moment.
So anyone who has a calculator can figure out the value of that 1 meter intersection and then dilute it in half, and then at spot prices calculate it. And I'm not going to do the calculations for people, but what I can tell you is at the Morrison deposit, at 2010 prices, which is roughly $4 copper, and nickel was probably in the $8 or $9 range. Gold is obviously a lot lower. I can't even tell you what it was, and platinum and palladium. But back then, we were mining for about $140 a ton in the Morrison deposit for our mining costs, and we had about $1,200 NSR rock. To give you a sense of, and we were mining anywhere from 180 to 210,000 tons a year.
Okay.
So you start looking at margins and doing math. It's not hard to understand the kind of margins you can have on this type of a deposit.
I was thinking in my head. You're making money. That's for sure. That's for sure. And then it's a case of getting after how much you've got there. Can you tell me what are you permitted to do now in terms of extraction? Can you?
Yeah. So right now it is a mine that is on care and maintenance, but it's an active mine.
But are the permits still in place?
Yeah, permits are in place. People go underground. We have miners working underground there, making sure, because this mine is also used by our neighbor Glencore as a secondary egress for one of their projects. So they actually pay us to ensure that ramps are kept in good shape and access is good. So it's an active mine. So for us to start mining there again, like from a permitting perspective from underground, there's nothing to do unless we wanted to do something.
But in terms of the extraction component, when you say mining,
like.
You can pull stuff out,
absolutely, 100%.
Pile it up.
Ship it off site. Everything's still in place. Okay. Now, there's definitely, the things have been parked since 2019, so there's some work to do. There's some rust to clean off. But we're ready to go. So the fact now that once this financing closes, we'll have a very strong treasury. We can start looking at what is the best way to move that forward. And right now, we're very excited at looking at the underground potential of reactivating the loading pocket and being able to skip material, first waste and then ore to surface. So we could potentially start developing next year. And again, a good mining crew is, say, developing, at least 150 meters sort of a month. So if we had to go up 500 meters, it doesn't take very long
Yeah.
to get out there once we're set up. So
Okay.
yeah, that's what we're looking at.
So potentially moving the rock, moving the dollars, and it all helps. It all helps, and it also gets everyone up to speed. It would game fitness. You know, it kind of gets the process moving. I kind of like the fact that you're taking advantage of this infrastructure and the permitting, and you're not being limited by, oh, we better go and prove out. We better explore the heck out of this thing and then work out what we do. There's a kind of commercial bent to what you're talking about to me.
Absolutely, and we do not need to do a feasibility study. We do not need to take out a big loan.
Yeah.
We're in a very great position here. And again, I think this has potential to be a real inflection point in our company. And people are starting to see that. Again, very early days. I think the next couple drill holes are going to be very telling of what our future holds.
So I think we've seen the kind of exploration redevelopment phase of the company corporately, and now you're getting this kind of commercialization, revenue, and monetization, value creation. Be interesting to see what you do there. You've had a good year.
Yeah.
Very good year.
It's great
Congratulations.
seeing you again.
And when those assays come back, call me.
We'll talk again. All right.